Hi there. This is a topic video looking at the economic and social consequences of economic growth. We'll focus both on the benefits and also the costs of growth. So what are the main benefits of economic growth? Well, I guess the obvious one is that increased GDP per capita should bring about higher living standards because it enables consumers to purchase more goods and services and raises average standards of living. There's been a significant fall, for example, in the number of people in the world living in extreme poverty, below $1.25, now $1.90 per day, PPP. And one would hope that sustained economic growth, lifting per capita incomes, leads eventually to sustained improvement in human development. Second key benefit or dividend from growth is that growth stimulates demand for goods and services, and this should then stimulate employment, helping to bring down unemployment rates. Having people in work is a significant causal factor in helping to avoid poverty. A third benefit is a benefit to the government. We call this the fiscal dividend. So economic growth boosts the revenue that the government gets from tax, both from businesses and consumers, and the amount that it spends on welfare, such as unemployment assistance and poverty support measures such as income support, that will go down as average incomes and employment rises. The net result should be that economic growth helps to bring down the size of a government fiscal deficit. It doesn't always happen to the extent that governments want it, but in theory, growth provides a substantial fiscal dividend. And growth can feed on itself, so growth can lead to the so-called positive accelerator effect. Fast-growing demand in an economy, for example, could stimulate lots of new investment. Companies need to expand their broadband capacity. Airlines need to spend more on new planes. Increasing pressure on the environment might stimulate investment in low-carbon technologies. And faster-growing countries are often more attractive to even more foreign direct investment. So growth can feed on itself through the accelerator effect. Here are four key benefits of relatively fast economic growth. Some people argue that there's actually a virtuous circle of growth. Let's just work this one through. So if a country can achieve a higher national output in real terms, that can then lead to increased investment, partly because businesses are making higher profits, so they have the money to reinvest. And if investment is productive, albeit with a time lag, we should see an increase in output per worker, an increase in labour productivity. Higher productivity is a driver of increases in real wages and salaries and incomes for people. And if wages and incomes go up, that allows people both to spend more on goods and services and also to save more. And savings can fund future investment. So here's the simple idea, but potentially quite powerful, that there could be a virtuous circle of economic growth. A lot of growth, of course, is driven and determined by the pace of innovation and invention, mostly from businesses, from the private sector, but increasingly, of course, we recognise the important role that government can have in driving innovation. So what are the benefits of economic growth that's driven by technological change? Well, in theory, of course, new technologies ultimately drive GDP per worker, and if productivity is higher, the unit cost of production will be lower. It allows firms both to pay higher wages and also to make higher profits. Innovation creates both new ways of doing things, but new products. And as new goods and services come onto the market, and as businesses then exploit the available economies of scale, we see the price of these new products come down in real terms, an increase in consumer welfare. For example, you could bring in consumer surplus, and also improve living standards. Big debate, of course, at the moment about whether GDP accurately captures the increasing spending on and innovation in the digital economy. For example, so many of the services we consume on the web are free to use, but there's clearly a value to us of doing them. And technological change is also quite important from the point of view of increased health. Advances in medical technology, extension to the range of treatments and to the quality, the effectiveness of health interventions can lift not just average life expectancy, which of course is part of the HDI calculation, but also the the expected healthy years that we might get. For example, when one reaches the age of retirement, how many years of healthy life expectancy can one look forward to? Improved health, if it's driven by technology, allows a more active labour force, reduced incidence of ill health, for example, and again should feed through to productivity. So quite important to think a little bit about the sort of the economic and the social benefits of growth driven by technology. That said, of course, there are some costs of rapid economic growth. There are some economic consequences, and also there are some social costs. The key evaluation point, I suppose, is that much does depend on the nature of growth, the causes of the growth we see. Let's go through some of the key points to think about. One risk is rising inflation. If we have a period of above trend growth, GDP is rising faster than the trend growth, that could be inflationary. If aggregate demand is rising faster than aggregate supply, that could lead to demand pull inflation and cost push inflation. And indeed, the central bank may decide ultimately that they have to tighten monetary policy by raising interest rates. So that could be a potential downside. We must also be aware of the environmental consequences of a period of fast growth of GDP. We see, for example, the depletion of resources and the creation of negative externalities such as pollution and congestion. There's a danger that growth might be unsustainable. Our definition, of course, of sustainable growth is growth that can meet the needs of the present without compromising the needs of future generations. A lot of attention now being given to try to achieve sustainable growth, particularly balanced growth in renewable investment. It doesn't necessarily have to be the case that growth leads to an increase in emissions. This chart is worth putting in. I think it just shows for the UK the total greenhouse gas emissions from 2001 onwards in million tonnes of CO2 equivalent. And you can see that actually the UK has made quite substantial progress in cutting overall greenhouse gas emissions and carbon dioxide emissions, despite the fact that clearly in 2014 the British economy was bigger than it was in 2001. So emissions per capita have been falling quite sharply, and much of that, of course, is linked to new technologies, in particular low carbon production methods. A third important consequence of growth is something you really can't avoid talking about, and that's the potential for income and wealth inequality to get bigger. The benefits of growth are not evenly spread, and for example, people who are unable to adapt to a fast changing growing economy may be left out of the benefits of increased employment. It's possible, for example, for growth to be strong but for structural unemployment to stay high. The benefits of per capita incomes are not evenly spread, and so there's a big debate at the moment about inequality and the extent to which reducing inequality would actually in the long run help to stimulate growth. So we've looked at some of the benefits and costs of growth, and good evaluation would allow you have to think about countries on a country by country basis. To what extent are we measuring the costs and the benefits accurately? Are we looking at growth from a short-term perspective, or are we looking at it across different generations? Come to a reasoned view about what you think are the benefits of growth bigger than the costs. Is it possible, for example, for a country to achieve balanced, sustainable, inclusive growth, which benefits many more people, but would that, for example, involve a slightly slower pace of growth than we might necessarily want? Lots more on economic growth, cause, consequence, policies, etc. on our YouTube channel, but I hope this little clip was useful in just taking you through some of the benefits and the costs of economic growth. Thanks for joining.